In markets, you often see the pendulum swing between both the bulls and the bears. And the question remains, have the bears run out of time? Have they run out of steam? Is it time for the bulls to be taking over? Is the worst over for the crypto market with the lows being at $74,000? And is it time for the bulls to take back control? Are we still in the 18.6-year real estate cycle and the winner's curse phase where we start to see parabolic advancements? We'll discuss all of this and more in today's show. Smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. Yesterday, Jerome Powell came out with pretty much a nothing burger when it came to the interest rate decision, with the rate remaining completely unchanged, which was sitting at a 96% probability to be the case leading into the event yesterday. And then we said that we need to watch the power of the mic to determine what may happen next. And it's all about taking all these various different puzzle pieces and adding them together for a broader picture to see where the market is most likely going next. And part of that puzzle piece was to see how his tonality would be. But I think the more important thing to look at is the reaction of the market off of his tonality, and actually came out with a pretty hawkish speech. But yet you see the markets moving towards the upside, right? A lot of this may be influenced by, of course, Donald Trump. You see the same thing happening within the stock market, where he's been teasing. He's been the master of at least market control. I don't want to use the word market manipulation, but the master of market control when it comes to saying the right things at the right time to initiate a move. And it's about reading the tape, seeing what the market is doing, following those at least announcements, right? So big announcements coming up, he says, either today, tomorrow, or sometime before Monday. That's what his words were. Thursday, Friday, maybe Monday before they fly out of the US. Big announcements, great for the US economy, great for the markets. And I think that's part of the parcel of why you're seeing a bit of a move. And it could also mean that you're still right here caught within the winner's curse phase of the 18.6-year real estate cycle, which the theory suggests that some point between 2025 and 2026, you should see a blow off top within most of the markets, right? The stock market, as well as, of course, the real estate market. And this would be the first crypto cycle that we've ever had participating in this 18-year cycle, because it started out pretty much around Bitcoin's inception in 2011, right? And we've seen how it's reacted through the mid-cycle slowdown phase over COVID. It's been pretty good, right? And for a couple of weeks now, we've seen Bitcoin holding up relatively strong against what the stock market has done. And are the tides beginning to shift back in the bulls' favor, right? Well, you're seeing short squeeze after short squeeze after short squeeze. We're seeing a slight increase in the volume and the open interest, and $212 million worth of liquidations coming off the short side. So overall, with 24-hour liquidations just around that $300 million mark, it's still actually relatively low volume. But if bulls do decide to step up over here and bears capitulate and move over onto the bull side, well, that could start to initiate some really sizable moves, right? So we'll discuss, are the bears running out of control? Are they running out of time? As well as you do see liquidity situated slightly above price action over here at about $100,000, that key psychological level. Watch for any spikes up into that. Watch for swing failure patterns. See how price reacts into that zone. As things are definitely starting to heat up, which is what you would actually expect if you're still caught within this winner's curse phase. So as it currently stands, liquidity in the short term is greater towards the upside than the downside, but over the higher time frame, there's a little bit more liquidity underneath price action over here at $93,000. I have outlined at least my feelings and thoughts is that a higher low is the most likely outcome. Any pullbacks probably likely result in a high low. And that's been the message over the last week or two, that you're probably not going to breach that 74K low before putting in a high low and attempting much higher. So fear and greed rising over here. Now it's 65 over there. And this has been the summary of Jerome Powell's speech and commentary. He said unusual swing in trade, complicated GDP measurements, near-term inflation expectations have now moved up. Tariffs so far are significantly bigger than expected, and they could play out over a very, very long period of time, right? So it's not an immediate effect, but it could have long-term effects on the markets. He says avoiding inflation will depend or avoiding inflation will be depending on the size and timing of the tariffs. There's time to wait before adjusting the Fed policy, meaning they're not really changing too much in terms of what they've been doing. They're still sticking with the same game plan. And survey respondents point to tariffs as the driving inflation expectations. And if we look at this is what we covered yesterday. We said, well, a lot of people are getting pretty optimistic that we're moving into full-on quantitative easing, moving away from quantitative tightening, which creates that loose monetary policy, which typically allows for the markets to pump towards the upside. And we brought up this chart yesterday, looking at the Federal Reserve's total assets. And we said, well, according to this, it's still pretty much in a straight decline, right? They're selling, they're not buying, they're selling assets. And if you look just above the red crossed out area over here, this is their Fed release statement yesterday. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, right? They committed to supporting maximum employment and returning inflation to its 2% objective. We know that trueflation is sitting below 2% already, but we said that they might continue to tighten to really drop it through those levels, because like a chart, it can bounce back, right? Inflation can be sticky and bounce back. And that's why we're seeing the Fed Reserve's total assets coming down. What does this mean for you? Simply put, it means that it's still risky to be an investor. That's probably the best way that I can describe it. A trader, no problem, right? We trade long, we trade short, we in, we out, we're taking the trades left, right, and center. But buying and holding with a blind approach where you're just hoping for the best, probably not the best idea when you see the Federal Reserve continuing to reduce their total balance sheet, which simply means quantitative tightening continues. But yes, we are nearing the end. And as per Benjamin County says over here, with QT continuing, it seems very likely that alt-BTC pairs will continue to drop. And we're seeing that Bitcoin dominance absolutely crush it, soaring to new heights, looks destined for 70%, right? And he says likely to go to 66% very soon. Alt-BTC pairs will likely drop to the 0.32 level. It's currently at it is at 0.32 almost. It's like 0.4. So it's got a little bit less to go. And then he says an eventual target. That eventual target's pretty scary. If it doesn't bounce off of the 0.32 and it hits the 0.25, I mean, that's looking at like, I think probably another 30 to 40% drop, with the majority of altcoins measured against Bitcoin, which means simply Bitcoin dominance continues to rise, which means the less risky play if you are longer term, if you have a longer term approach and you're more an investor or high time frame swing trader, Bitcoin. That's pretty much the better play as it currently stands, right? So yesterday we looked at the low volume on the stock market. We'll see how the volume rises today leading into this. We'll see if the stock market plays out with continuation in a similar fashion to what we're seeing in terms of what crypto is doing right now. But we did say that we're initiating the short trade over here with stop loss slightly above. I would be inclined to bail out of this position very, very quickly, given the momentum and strength that's happening within crypto. I'd be willing to move the stops right over here straight to break even on that trade that we took recently. So if price does start to gain acceptance above the 200-day moving average, I will bring optimism back into the market. And at the end of the day, price action is the most important thing, right? I do want to remind you, there's completely objective evidence right before us, lower lows and lower highs. I mean, literally lower lows and lower highs, but grinding into this area over here, I would expect that that would probably start to snap back through that level. And if you see that coming with volume over here, then bears have had their day. It's over, right? It's over for the bears in the short term. In the high time frame, maybe they come back. But in the short term, things are looking good. We spoke about the 3 candle closes above the 21 weekly exponential moving average. We spoke about the break of the stop and reversal indicator, which is a good sign. That occurred not this week, but last week. Last week, we broke that. This is our second week now above the 21 weekly exponential moving average with the break of the stop and reversal. Generally, this shifts your bias slightly towards the upside, meaning cautiously bullish, right? So that's cautiously bullish within this environment, and pullbacks are basically for buying. There's great momentum over here from the bulls on the weekly time frame, and we really wanted to see the dailies come down a bit more, right? Are you going to get that? Not necessarily, right? You don't always get the perfect setup, but it would have been really, really, really good to see over here this start to roll over to line up with the weeklies, and the momentum oscillators reset beautifully. But bulls are definitely looking very strong over here despite the low volume, right? Volume should start to tick up off of yesterday's move later today. The 7-day daily exchange volume should start to rise over here. That's your 12-month look. So looking to base out around this $25 to $30 billion mark. And really, we need to still buck that trend. So good times seem to be coming, at least in the following weeks. And I do think that bears have basically run out of time. I would simply state it like that. This was the environment within this bear moon where you wanted to see bears at least pull price action down into $89,000, which was the base case. They weren't even able to get it over there, right? Then we said possibly $86,000. Right now, it looks to me like they've run out of steam. I think that it's very, very unlikely that they're even going to get it to $86,000. Never mind those low 80s. This is not even in question for me right now. Not even in question, right? The expectation is the way that price action is unfolding over here. It lines up more similarly with what you would see over here in the winner's curse phase, where things can really start to heat up and you can see the bullish momentum kick into extreme greed and FOMO, and you can start to see those explosive moves towards the upside. So we'll see how this candle closes over here today, but right now, closing above that golden pocket at the 0.618 to 65, that basically starts to annihilate and invalidate the bearish case over here, where, I mean, you're pretty much just slowly grinding up, and that tends to lead that grind into explosive moves later on, right? So all in all, that's looking pretty good. Volume is still low. That's the only thing that the bulls need, right? The bulls just need the volume. Price breaking back above over here. I think it makes total sense that a lot of traders would now have their stop loss just below these lows, and they're going to be targeting back towards the highs over here, anywhere between about 106,000 and even 108,000 towards those all-time highs. So I'll be preparing and looking to take any of the trades on the altcoins. We'll spend a bit of time today looking at the altcoins. Since Bitcoin is the guide, price action analysis is the first and foremost thing that we have to look at. And there should be risk to reward, at least some pretty decent setups when it comes to the altcoin market. Right now, this is looking more likely than not that it's a breakout, right? You can see over here the downsloping trendline parallel channel, still low volume. Yes, so it opens up the realm for a trap-like scenario, but the more candle closes that you have over here above the points of control, which is $97,500, the better for the bulls, right? The more closes you have above there, it starts to line up similarly to what we said over here with 3 weekly closes above the 21 EMA, drastically increases the probability that there's no way you're taking out this low, and instead you're just going to continue to rip towards the upside. So if you are wanting to take these trades, there is an opportunity with L-Bank, guys. They're giving $10,000, just shy of $10,000 cash back weekly, which is unreal. It means if you're a large trader and you want 0% maker fees, you can unlock that cashback trading bonus. They'll literally deposit money into your account every single week for trading over there. So have a look. All the links are in the description below. It explains everything over here. You know, let's say basically you're trading about $50,000 worth of volume. Your cashback is $500 per week, which is pretty big, right? That doesn't mean you have to deposit $500,000 in cash, but you're more trading $500,000. So I have the account funded. I'm getting ready to take all the trades over here, and stay tuned for that. We'll go through the altcoins today. Now, the one thing that I'm looking at and we've been focused on pretty carefully to scalp long, scalp short all the way through is the deviations of this USDT dominance. And now it seems to be gaining acceptance below the 4.98% region. Give it a round number and call it 5%. As long as USDT dominance can't get back above here, you know, that increases the chances that you're going to start to break down towards 4.6. This move from here to here can be pretty large for the crypto market, right? You'll see altcoins running double-digit gains in that type of environment. All you have to do to understand what it's done is have a look at what happened from here to here, right? The last time that you dropped within this environment, what type of moves did it initiate, right? So if you're gaining acceptance below the bottom of this trading range, which seems to be possibly the case, then expect higher prices for the rest of the altcoin market cap as well as crypto. Now, again, I do want to remind you, higher time frame, you'll probably continue to see altcoins bleed against Bitcoin until we actually have a confirmed top on the Bitcoin dominance. But it doesn't mean risk to reward ratio that there's not trade opportunity. So what would invalidate the long thesis, of course, is a deviation and holding back above here. This would equate to this and this, what we saw previously, which did create some sizable pullbacks, right? So Keep an eye out on the USDT dominance, very, very valuable. We spoke about Ethereum. I spoke about how there's a great trade opportunity over there. We started to go long on Ethereum around 1,500, and then we started to build the longs again just under 1,800, right? So we went 1,500 to 1,900. We took the profits. We started to build the longs again just under 1,800, so around that 1,780, 1,790. And now you've seen Ethereum put in a sizable move, right? And part of that was there was some big bites, right? If you look over here, $60 million worth of ETH was basically purchased, right? And you got the ETH BTC ratio coming into key support over here. So all in all, that's looking pretty good. And this has been the move, right? So holding this region over here, giving you a beautiful almost 10% move without too much risk, right? Because you're just holding spot. And we know that there aren't that many sellers left when it comes to Ethereum. Most of them at this point have already capitulated. So I think that this has been the trade to watch. And not only that, but soon, if you get above that $2,000 mark over here, you would have essentially created a massive deviation, right? So this would be a massive deviation back into the old trading range. And if you can break back and hold into that 2,000 region, it opens up the possibility to trade a whole lot higher on ETH. So currently, ETH respecting and holding that golden cross over there with high lows off of the 50 and 200 EMA on the 4-hour time frame. Has this move shifted things on the daily? Well, I believe this should have got you above the 50 EMA on the daily, right? Let's have a look. Let's let that reset and we'll have a look over here quickly. There it is. So there's your first break above the 50, rolling over. Multiple candle closes over here means we got the early entry from 1,500. We took profit at 1,900. We relonged at 1,780 to 1,790 within this region over here at the lows. And this is looking good, right? At least for now, move up to the 200 EMA, targeting possibly towards these highs over here, which would be like 2,500. So all in all, that's looking pretty good. We can have a look at a couple of the altcoins. I think that this is where a lot of the lagging opportunities still do remain. Of course, this is low time frame trades, so you're just taking it from a risk to reward perspective. We'll go through the list over here. This is one, right? It's 𝗡𝗡. We'll have a look at, I just opened up the trade on it right now this morning, just before doing the show. So pretty much you can see that's just been open, only up like $12, literally just open. I opened this on Pinex. Here's the current trade, right? Even our ETH traders now in profit eventually, right? Eventually in profit. We got our Solana trade up 75%. Our 𝗬ie trade is 77% up. Remember, this works on the grid bots, right? So if you look at this, this is working on the grid bots. If you look at the details, essentially over time, it's buying low, and as price moves up, it's using the smart bots to sell into those key zones. So all in all, that's looking good. That is our Pinex trade setup. All the links are below over here if you do want to actually copy those. First and foremost, you'll need a Pinex account. You get up to $1,000 sign-up bonus when you do sign up. And then if you want to actually just copy those strategies, you can. Alternatively, you can actually create your own strategies, right? So you can go through to Futures Grid. You can click Create. You can either copy other people's strategies, or you can copy mine using the links, or you can set up your own. So the one that I set up over here was on 𝗡𝗡. It's not available in the link in the description right now, but we'll make it available later because I just created it. So let's look for a couple more opportunities. I took 𝗡𝗡 because I wanted to put a bit more risk on the table, right? If ETH is going to start to move, we know that 𝗡𝗡 tends to be a higher beta play against ETH. We know that if BTC is going to continue to march on and Bitcoin dominance eventually drops, you know, this looks pretty solid in the sense of you have some beautiful high lows. This is now your third higher low after the low. So low, high, low, and you've created your high. So we're expecting that trending structure to continue, and we're targeting towards the yearly open. Pretty simple, right? So essentially, just to explain to you what I've done with that bot, and I'll just use some highlighting drawings over here. I'm basically set buy orders scaling into that region in case we get a bit more of a pullback down towards the previous month's mid-range over there, which is going to be last 4 digits or last 3 digits, 777, right? Looking to buy into that. I don't even know that if we're necessarily going to get that. This thing may just start to blast off through here. And as it does expand towards the upside, it will be taking profits off of the current buys that I've already set on 𝗡𝗡, right? So we can have a look at a couple of the others over here. You know, pretty simple. Most of the coins, all you have to do, we took the ETH long as well. This worked out very, very well. You know, in hindsight, we should have just flipped this thing into a swing trade. I'm going to remove that. This was on one of the whale room Zoom sessions, I think, that we did on That was on Tuesday. On Tuesday, we took that trade over there following the sweep of the Monday low. Beautiful trade over there. So let's go into the daily. So let's have a look at a little bit of the high time frame. You know, for most of these coins, your invalidation is simply going to be just below the Monday low. That's where you expect your high low to have formed, and you're still looking for the same. Ever since we were establishing those long positions further down here, I think it was over here at the 0.5 at $125, we said the initial plan, and that plan remains the same, yearly open. Simple. All the coins, any positions you're looking at, target the yearly open. That's what you expect to take place. 𝗬𝗎 was from 220. Beautiful move up. Have we already hit the yearly open on this? Let's just let that load up. It's just taking a bit of time for Spaceman BTC to load there. Let's see. I think this one may have already hit the yearly open. Any day now, any day now. Is this thing going to load up? Let's see. It's trying. Let me know in the comments while we do wait for that to load. I really want to see where 𝗬𝗎's key levels are. Let me know in the comments if there's anything else specific you want to have a look at, any other trades that you're looking for. So 𝗬𝗎's already almost played out the full move. The initial trade was from the low here at 220, and the yearly open trade was an 85% move. We've currently already played out 63%. Other than this bot over here, you know, I've actually already closed my 𝗬𝗎 position, the main one that I took as per what I mentioned when we started to put in those highs over there. I already closed that. Theoretically, I could re-enter at the same price, but I don't think I'm going to do that. I'm going to move on, look for something else. Okay, Sonic, right? Not bad. I think Sonic's also in a relatively decent zone over here, you know, putting in that high-low structure. Same thing, pretty much invalidation below Monday low. As long as you don't break below Monday low, most of these coins can continue to expand all the way to the yearly open. So, for example, let's say if we have Sonic on here. I'll actually have a look over here. Let's see. Do we have Sonic USDT? So there it is, Sonic USDT. I'll show you guys exactly how I set these bots up. So let's go on to a 4-hour time frame over here. And let's say we're going for a long strategy. We're customizing it. Essentially, I'm looking to, you know, the lowest price that I'd want to be buying into is about 49 cents. So 0.49, there it is. And the highest price, which is where I'm going to be looking to exit this position. Let's just go over here. Yearly open, we trade that up to about 78.77. So highest price, 78.77, 0.7877. How many grids do we want? Let's just throw in 50 grids over there. That's what it looks like, right? Essentially, that's how it looks. I'm running on 3x leverage. I'm going to go a little bit higher on this. I'm going to go a $5,000 position times 3. It's a $15,000 position size, 5,000 equity that's used, and we'll create that. Ting, ting. There it is. Okay, cool. We're in. So that's the trade. That is the Sonic trade. So the new ones I've opened up. Sonic, 𝗵𝗡. If the market continues to run, I'm happy to hold these. And the bot should do the work, right? I'll create these for you guys and share these for you at a later stage. Let's see, can I do it from here? I think I might have to do it. There it is. Okay, I'll share it with you straight after the stream. So for the live viewers, just wait for after the stream. Straight after the stream, the new bots, 𝗵𝗡 and Sonic, if you want those, they will be dropped as well into here underneath the other bots, right? So we have those strategies over there. I'll add those, the next 2 in there for you. All right, let's see. What else? What else have we got? Maybe we'll find a few more opportunities over here. I also want to open some manual trades, not only bots. Hype, look at that. I mean, Bitcoin is doing something similar, right? In the sense that Bitcoin had the parallel channel governing towards the downside. You deviated as soon as you got back inside the range over there. What I must say, what I was really hoping to see on a lot of the charts, which we didn't get, is the inverse head and shoulders, right? I really would have loved to see this. What happens when you start to run aggressively like this, the more aggressive it gets, the bigger the pullbacks, right? Then you get these massive dumps when the dump does eventually come. But it is what it is, right? We can't control the market. All we can do is adapt. Here's another opportunity. Look at this, Bearer Chain, right? I've heard a lot of good things about Bearer Chain. What is Bearer Chain doing right now? As of today, it's right now deviating that level. I'm actually going to have a look over here. Do we have Bearer Chain on here? I think it's worth scaling into a bit of a position on Bearer Chain. Bearer Chain, what would it be under? There we go. We got Bearer Chain over there. I won't go too sizable on this trade because this is going to be incredibly risky. I'll probably scale from 295. So futures grid over there, customize. We go from, I don't want to buy any more below that low, 2.995, 2.995. And let's just quickly see. I mean, this you can trade this. Probably at least to 570. I'm going to go a little bit more ballsy. I'm going to go to 846. 846 on this. Okay, let's run it. 846. I'm going to go again, 50 grids. No, we need more grids than that. Let's go 100 grids. That looks a bit better. Okay, 100 grids. And how does that look? Wait 1 second. Let's just pull that down a bit. Okay, not bad. So if we get a bit more of a pullback or buy a little bit more, and then we can run it to the top side over there. This one I'm going to go with about a $7,500 position size. So I'm putting in 2.5 over there. And let's create that one as well. Okay, so I owe you 3 bots. I owe you Pepe, Berachain, Sonic. Those are the 3 that I owe you over there. This is also a layer 1. So, I mean, I've heard there's been a lot of building on Berachain. A lot of the people are relatively bullish on it fundamentally. Basically, if you start to reclaim and close multiple candles above this, I must say, this is the highest risk one that I've taken right now. The reason why is because what is the structure, guys? The structure still is maintaining those lower lows and lower highs, right? That's your current structure, but we're watching for the potential deviation. If you deviate into the trading range over here, that starts to look similar to hype, right? Let's go back to hype. So if you deviate back into the trading range, Berachain would be the equivalent of this area over here. Deviate, get back inside, run it to the top side over there. That's what we're looking at for Berachain. Okay, cool. What else? All right. Let's see. Anything else that we need to look at? So we've done Berachain. That is the general thesis, which means today's close is going to be vitally important. But even if we put in a little bit more of a pullback over the course of today and this week, we're buying more into that zone as per the bot setup over there. Okay, let's see what else is there. Let's have a look at another one that I thought I'd have a look at, which I was just scrolling through my charts this morning. I thought, it didn't look too bad. Something that's been obliterated in the space is it's 𝗪𝗡, right? Let's go to 𝗪𝗡. Where's 𝗪𝗡? That's our AI section, meme coin section. Where is our file storage? Let's go to 𝗪𝗡. 𝗪𝗡 has been killed. Disgusting looking chart. But let's have a look over here, right? If it squeezes to the yearly open, you'll start to get a big move. I like the way that these previous couple of days have started to form from a structural sense. As long as, again, same story. As long as you can maintain that Monday low over there, which is the Monday low. You don't want to break below the Monday low. Don't want no closes below the Monday low. If you can hold that Monday low, you've created your higher high. You broke above the top side of the trading range. This could be the move that gets things going. And there's a lot of inefficiency over here, right? Remember, markets don't like inefficiency. Markets tend to trade efficiently, which means I'm not necessarily calling for squeeze to the yearly open, but could you squeeze here, like midway into this region? Absolutely, right? And still put in a lower high, smack it down and crush it one more time, of course. But before then, that becomes a tradable move, right? You can see where your risk remains at the moment. If you put if you started to enter somewhere around here, super tight stops below those previous lows, and you're just trading it into that zone, that's already giving you a beautiful 3-to-1 risk to reward ratio, which we take every single day of the week, right? 11% drawdown on a highly volatile coin like this is not bad, right? Definitely not bad. Filecoin actually kind of looks very, very similar to 𝗪𝗡 over here. This is absolute junk for the long term. I hope I don't offend anyone. Absolute garbage. Definitely do not buy and hold any of these things as investments. But for trades into these inefficiency candles up to like $4, that's a tradable move. Again, I'll show you what that would look like. You're looking at something like this. Pretty simple. Tight stop loss below Monday low. Trade this straight into the inefficiency over there. 4.44 to 1 risk to reward ratio. Not bad. All right. I heard a lot of excitement around Foxy, so why not have a look at that? I even saw you guys commenting about it now. Starting to heat up. Garbage chart looks absolutely horrendous. I don't know. You guys are gambling. I wouldn't touch this personally. Personally, I would just leave it. I know there's something about linear mainnet coming out or something like that. So Foxy is the meme coin on linear, which gives you exposure to the linear chain. And maybe they believe they're going to get some sort of an airdrop or something. So usually these things, as they squeeze up, very dangerous trade, eventually it gets smacked back down, right? How's Fartcoin doing? What once was doing very, very well. Okay. I mean, it's holding up. Look at that perfect test into the yearly open. Hold that yearly open over there. So I guess now you just want to see this continue towards the upside. 0.5 level coming at 148. That was the original target when we spoke about this previously. If I'm not mistaken, I think we're looking at this on the reclaim into this green box over here. That was the long trade setup into the zone. Okay, what else? Butthole. How is Butthole doing? Butthole looks pretty dead. This butthole has been stretched. And I'm not sure it's going to return. Again, it's a bit of a gambler's market when it comes to Butthole. Okay, Brett also heating up, right? Similar to Pepe, these things often trade very, very similar. So trading and squeezing up to the yearly open is entirely possible. But I mean, the risk over here is pretty high, right? You look 26% drawdown. I don't know. I'm not so happy with that. What else? What else? Fog. How's Fog doing? Okay. It's okay. I mean, just range bound. I mean, you just, I guess you're hoping it does what the rest of the market does and it's going to squeeze. Let's see what else have we got over here, guys. WIF. Let's have a look at WIF. Maybe there's an opportunity over here on WIF. The long forgotten coin, right? Dog with hat. Yeah, high lows. Again, you're playing the same kind of move into the inefficiencies up here towards the yearly open. Same story. What's your risk over here? You're looking at about 16% drawdown. Obviously, you can control your risk, take smaller position size. I don't know. Do we take a WIF trade? Let's have a look over here quickly. I want to just line it up with some of these things. Okay, how's WIF doing on the daily? Let's see. Okay, it's reclaiming the 50, which is good. Reclaim the 50, multiple candle closes. Should we do it? Let's just throw it on, right? A lot of risk on the table over here. I'll be quick to cut these, but let's go. Why not, right? It's now or never for the bulls. Okay. Also now or never for the bears. The bears ultimately need to take control. So I'm going to scale into this down to 52 cents. This is WIF 0.52. Now, oh yeah, another trade. I'll run this one up to, let's quickly check the dailies. Okay, into these inefficiencies in the yearly open, we got the 200, which is tracking down. I'll be watching about 143. Let's see over there, 143. Yearly open is way, way, way higher. I don't know if I'm going to run it for that high. I'm going to go to about 143. 143 on this. Let's test out 50 grids. That doesn't look too bad. We'll go also relatively low position size, $7,500. And I'm going to create this one as well. Okay, let's see. Let's see if we're going to be driving the Nissan Sunnies of Dubai next week or Lambos. I'll let you guys know. Okay, what else, guys? Okay, let me know if there's anything else that you want to have a look at. Pengu. We can have a look at Pengu. Pengu USDT. Just keep in mind with the trades that I'm taking over here, guys, these are grid bots that scale into your positions. So it's not like I'm buying at this level. If price goes down 16%, I didn't lose 16% of the trading account. The trading account is a very small percentage of my relative account size or net worth. And plus on top of that, I'm scaling into the trade, right? So if wrong, I stand to lose very, very, very little. I just want to make that very clear because I don't want other people to come in now like throw their whole accounts in on these trades. That's absolute insanity. You'll get completely rinsed if you do that. And yes, Pengu doesn't look bad. It's just like the rest of them. All these things are looking like they're putting in their high lows, ready for expansion. You know, you got a big move up, you consolidated, and it's looking for expansion, right? And I would expect these trades to play out, by the way, over the next 3 weeks. Just to be clear, over the next 3 weeks or so. Okay, what else? What else? So these are high risk, right? Very low volume. If you thought the volume was low on Bitcoin, well, the volume on meme coins are going to be even lower, right? Super, super, super high risk when it comes to these trades. Cool. Let's see. What else have we got, guys? 𝗏. We can have a look at 𝗏 under some of the AI sector over there. So 𝗏. Okay, let's go to 𝗏. Okay, for me personally, a bit late. I don't love the chart. I think a lot of the other charts that we've just looked at are much better. I mean, it's been range bound. We did bring it up at the time when it came into this key low, and we said that, you know, this is a very, very, very key point that you want to see this hold, because if it didn't, 𝗏 could have moved all the way down another 73%, but it held that level, put in a bounce coming into lower high structure over here. It is consolidating, so it probably breaches above the yearly open, but I think it's too late on this one. Okay, Myro, all of these are risky, right? It depends on how much capital you have. These are super low caps, right? Like Myro. It depends on how much capital you have available. Like if you're dealing with 6, 7, 8-figure accounts, I mean, you can't even touch this stuff. But if you're dealing with like 5 digits or below, of course, then you can take these types of trades. Yeah, it's okay. I mean, similar to the rest, right? I would just expect to squeeze up to about 40 or 0.045. And if it really got heated up to the yearly open, let's just see percentage-wise, what are these things looking at? So this is what I'm talking about, right? You could get these double-digit gains, right? If the market starts to squeeze over here and a short squeeze continues, double-digit gains, especially if we are still in that winner's curse phase. So let's quickly see long to short ratios on the top over here. See, pretty divided, similar to the polls. I run the polls over here all the time. Can go to the poll. There it is. Fed announcement was a nothing burger. Is the market ready to finally pump? 70% of you said yes, and 44% said no. So very, very divided. We're seeing the same thing over here. One thing I can tell you is that if you look at what the speculators are doing, speculators are still short. This has been the case for about 3 or 4 weeks, right? And as long as they keep shorting the market, then it creates the opportunity to squeeze price higher, especially in a low volume environment, right? You can just keep squeezing and squeezing and squeezing. That's how you get these. These are mostly short squeeze driven rallies. There hasn't been real demand that's come in, right? The real demand comes in over here. Now, if you're buying now, you're buying with the expectation that the volume is going to turn over here and real demand's actually going to come in and price is going to get chased. I want to be very, very clear that there is still some major risks, right? At the end of the day, structurally, the stock market is still right in that zone where you would expect the lower high to occur. The difference is the way that it keeps closing and grinding into this region over here is leading me to believe that it could easily explode towards the upside first. Okay, and then that creates enough of a move to trade to the yearly opens on a lot of the coins. And since Bitcoin was at $81,000 to $83,000, you can go back on those previous shows. That has always been the plan of action, right? The plan of action. I mean, even if you go into Whale Room in the Discord over here and we scroll all the way up, I think we'll probably find over here. I mean, these have been, some of the trades that we had been outlining. What is this one over here? This was Ethereum, right? Reloading the trade at around the $1,800 region, looking to trade it where? To the yearly open. Nothing has changed, right? What date was this? This was the 25th. That's like 3 weeks ago. And if we keep scrolling and scrolling and scrolling, where is our BTC trade? We started to look for that as well. Here's the BTC trade, right? We're looking for the deviation when Bitcoin was where? $83,000, $81,000 to $83,000. Where were we looking to trade it to? The yearly open. So none of the plans have changed. It's just taking time, right? It takes a lot of time for the market to play out. So again, I just want to be clear. This type of move, a little bit of a squeeze in the stock market, if volume comes back, it's just a move to the yearly open. Then we reevaluate. We're not here. I'm not here, at least. Maybe other people are here doing this, but I'm not here to say that, I'm buying and holding because Bitcoin's going to $500,000 to $1 million. No ways. I'm here to say we're trading the moves to the yearly open, and then we take our money and we run for the hills and we wait for the next opportunity. Literally as simple as that, right? We don't need to play much of an investor game right now, at least in my opinion, right? Why? Well, because we think we're coming to the end of a massive cycle, almost a 20-year cycle. Also a 100-year cycle, 1929, Great Depression plus 100 years equals 2029, right? These things tend to be cyclical. So I think that the blindly buy and hold approach is very, very, very risky at the moment within the market. So it's more traders market. We take our trades, we in, we out, end of story. And as more of a swing trader, which is what I am, I consider that a swing trade. These moves, that is a swing trade. Trading the market from here to the yearly open is a swing trade. Okay, and we're doing the same thing on the alts. All right, cool, guys. What else? So if you do want these trades, again, I'll remind you, I'm going to drop them straight after the show. I'll make sure once the stream has ended, it's probably going to take about 15 to 20 minutes for after the show to have ended to actually upload these. Then we're going to put them on the stream. Just come back over here if you want to add into the new ones. Pinex, first you can sign up over there, claim your sign-up deposit, and then you can come through over here and you can copy the strategies. The other ones are already running. I would say maybe you're better off going with the new ones that I've just opened because it's still relatively early on those. And that is it from me. Thank you all so much for joining. I do appreciate each and every single one of you, and I hope you have a lovely, lovely day. Let's see. Bears are running out of time. They got this week left, in my opinion, and then the pendulum swings into the bulls' favor. I'll catch you all on the next one. I hope you have a great day, and cheers for now.